Just how bad is the widow's tax trap for the mass affluent? Hi, this is financial planner Sean Mullaney. Let's discuss. So last weekend on the channel, I stress tested a $4 million traditional IRA for a widow age 80, and I demonstrated that, that wasn't that bad of a result from a tax perspective, and I got a lot of comments and likes and some dislikes on that video, so I appreciate that. And that video was really intended as a stress test of traditional retirement accounts. And I think stress tests are great, but sometimes they distort our perspective. So this weekend on the channel, I wanted to do a more retail, more common affluent retiree widow. And so I'm going to do Estelle. Estelle is a widow. She turns 85 in the year 2025. I want to look at an RMD when we're 85 years old. That's part of the reason I picked that age. And her assets are good, but they're not quite as extreme as last weekend's video. So she has $1 million in a traditional IRA at the end of 2024. Great. She's got $50,000 in an online savings account. She has a taxable brokerage of about $250,000 in a domestic equity index fund and a paid off home. She's doing fine, but she's a little more of the mass affluent than someone with a $4 million traditional IRA. All right, well, let's take a look at her tax situation. So her income is $36,000 in Social Security, qualified dividends of $3,250, non-qualified dividends of just $250, interest income on that bank account, I'll say $2,500. Now, RMD, this is interesting, right? So we have to figure out, okay, what's her RMD at age 85? The factor we use off the IRS Uniform Life Table, that's the Uniform Life Table, is 16. So that's interesting to me, 16. So we're going to take that million divided by 16. And what result do we get? We get 62,500, right? So think about that. That's one of the critiques of my video. Well, what about the RMDs at 85 and 90? The RMD percentage at 85 is 6.25%, which most advisors at age 85 would say you should be living on a lot more than 6.25%. How much longer are you going to be around anyway? But we're going to have Estelle just take the RMD. She's got a paid off house. She's single. She's 85. She's doing just fine. Her total income is over $100,000. So she's doing fine. But what does her tax return look like? She's in the widow's tax trap. She's got this big RMD, although frankly, at age 85, she probably should be spending more than 6.25%, but that's neither here nor there. So we're going to use 2025 numbers, just project out what her tax return looks like. So her Social Security, almost $31,000. It's 85% taxable. That's fine. Some qualified dividends, non-qualified dividends. We get an and the RMD, that's a big number. We get an adjusted gross income of $99,000. And then let's go over her deductions. $15,000 in a standard deduction, $2,000 in an additional standard deduction, $50 qualified business income deduction on those non-qualified. They're probably $199A dividends. Okay, so her taxable income is $82,000 and some change. Look at her numbers here. Her federal income tax is $12,700. Okay, well, what is that as an effective rate? 12.9%, right? And even for Estelle, to have built up a $1 million IRA that was $1 million at age 85, her and her husband, they had to deduct almost certainly at 22%, probably 24%. So they're doing just fine. In fact, the last dollar, she pays a bunch of it in as a margin. She pays 22% on a bunch of that income. So maybe a bunch of that income was tied, or maybe she only won by 2%, but she's still doing fine. She's certainly not crushed. And I think this one is very instructive, right? This is a mass affluent person. Less than 1% of her wealth goes to the IRS this year. And even as a percentage of the traditional IRA, it's 1.27%, right? So less than 1.5%, a good deal less than 1.5%. She's doing fine. And I think this just, I wanted to step back and say, well, retirement accounts and 20+% effective rate, are we starting to get not so great? Well, look at Estelle, right? 12.2% effective rate. Less than 1.5% goes to the IRS in terms of the IRA. She's doing great. And let's just say they increase taxes on retirees. Not a likely outcome. I did a video on that, but let's just say they increase taxes 50% on retirees, in which case Congress themselves will become retirees. All right, that's 19%. Not going to crush Estelle. She's going to do just fine. So for all those reasons, I like traditional retirement accounts. For many Americans, it's just a great way to build up wealth. And yes, you have to pay the piper on the back end, but if you're mass affluent, look at these numbers, you're probably not going to be paying the piper that much, even when you're in the widow's tax trap. Let me know what you think in the comments below. Thanks so much for watching this video. If you enjoyed it, please mash that like button and subscribe to my channel. I'll see you next time.